Hello, everybody, again. I know we just spoke about an hour ago, but I am back with you all again. Again, Chris Rivera, Director, Client Relations with Integrity. Appreciate you taking some time to join us. Wherever you are, hope you're safe and sound. Again, I'm in New York City and looking forward to a little bit of a break during this year-long tax season coming up this weekend. And so I want to introduce my guest. I have with me Joey Ryan, who's the CFO at Gilded. And today, we're going to be talking about digital assets, blockchain, and cryptocurrency. So we'll kind of break down the basics and then help educate on how this all works, and hopefully you enjoy it. But first, let's introduce Joey. Joey, tell us a little bit about yourself. I know you're out in New Orleans, and yeah, take it away.
Yeah, thanks, Chris. Happy to be here, and thanks everyone for joining and checking out the episode today. So I am a CPA accountant. Hopefully one of many here listening. I worked in public accounting, so I feel everyone's pain out there. I've been there with you guys. I've been in the trenches. I've done the work. So been in y'all's shoes. I worked as a financial statement auditor for 10 years. Worked at EY. Worked at RSM. Some of the larger firms out there, and got a really good vast variety of kind of industry experience through there. But really, how I got started getting into crypto and blockchain was during 2017, when kind of everybody and their mom was buying Bitcoin on Coinbase, and just kind of riding it and seeing what happens kind of when the initial hype cycle started. But I really got into it not just from kind of the Bitcoin angle, but more of the accounting angle. This was when like the Journal of Accountancy, the AICPA, was putting out all of those kind of their weekly newsletters were all about blockchain and crypto and how this is going to really impact accounting and really kind of flip accounting on its head, the accounting industry on its head, and really change the accounting landscape going forward. So I was like, all right, what's this about? Like how if our jobs are going to change, I should probably learn about what this like internet money stuff is. So I kind of went down the rabbit hole from that angle, and that's when I really discovered kind of the power of blockchain and crypto, and really how that's the future of finance and kind of transactional rails, payment rails, and accounting going forward. So once I really understood that and understood the implications that it actually is going to have on accounting going forward, that's when I was like, whoa, I really need to get involved in this industry like ASAP, kind of from the ground up. So I met my other co-founders of Gilded here in New Orleans, actually at the Ethereum meetup that we had running here in New Orleans. So we had the initial idea of crypto invoicing, crypto payments, combined with kind of the tracking and accounting aspects. That was kind of our loose, if you want to call it like V.01 of what we were, basically our idea, what we were trying to build. And we were fortunate enough to where we got into the Techstars blockchain accelerator program in New York City last year, 2019. So we spent 3 months up there really honing in on customer discovery, products, kind of the space, the crypto accounting space, crypto payment space at that time. And this was when kind of DeFi was still early, stable coins were still early. Like some people were like stablecoin believers back then, but a lot of people were skeptics. And then a couple months, I'd say 6 months into 2019 is when stablecoins really started taking off, and that kind of started laying the framework a little more clearly for what we are building today. And what we actually have today at Gilded is we are the business infrastructure and layer for businesses to be able to transact utilizing digital currency, cryptocurrency. So right now, today, there's no business applications out there where if you're a business trying to transact in crypto, utilize the advantages of digital currency for payment, the speed, transparency, and low cost as you're sending payments to remote teams, if you have remote payroll, vendors across the world, as you're kind of, a global business now, right? Operating globally. If you want to utilize the kind of digital currency payment rails, again, to take advantage versus the older traditional payment rails and not pay your $40 wire, not pay all your FX fees, utilizing digital currency, we make that super easy for business to be able to implement that into their existing kind of operating structures.
Love it. Wow. Yeah. It's an incredible value that you provide. So with Gilded. And so let's take a step back. And sometimes the clients that we work with are just kind of starting their practice, or are inheriting a practice, and they might not be too familiar with it. We hear about it a lot.
Mm-hmm.
I mean, it's only a decade old at this point, right?
Yep.
So blockchain, right? That's kind of like the foundation. So can you give it to us in like an accountant for dummies kind of aspect of it, just for blockchain?
Yeah. So what I tell all my accountant friends is that blockchain is one giant open general ledger that anybody can participate in, and transactions that occur, or transferring a value, whatever you want to call it, in and out, right? A transaction, transfer of value, anything that occurs on the blockchain is immutable. It cannot be reversed. It cannot be like hacked into, can't be changed, etc. So a good way to think of it is like a giant, for like us auditors, accountants that are familiar with like internal control structures, etc. Think of it as like a black box of transactions that can't be changed. Black box. And if you have the proper controls of the transactions going in, right, going into the transaction to the black box, so like payroll processing, right, same thing. If you have the controls over transactions going into the blockchain to verify that you have good data going in, so you have like like somebody that has access to a wallet to send Bitcoin to vendor XYZ, they're not doing it fraudulently, etc. If you have the proper organizational and business controls and internal controls over that kind of structure, like payment structure, similar to any AP system, right? To verify that, okay, this transaction was properly executed or was input into the system properly. Then once it's executed through the blockchain, you know that the blockchain is processing that transaction correctly, and the data coming out of it to basically process it and verify it is correct. So if you have the controls going into it and then the controls coming out of it, meaning you have the proper bookkeeping controls in place to record that transaction into your accounting system within the correct classifications, then you can run the system properly. But it's like any other type of payment process, right? You have to do kind of the same thing, for wires, ACH, checks, etc. You need to have proper controls as a business. So if you have those controls in place, the blockchain is the same thing. What the blockchain provides in value for anybody trying to use it for payments is that you can send millions and millions of dollars to anybody across the world instantaneously. There's no middleman. So the blockchain takes away control of the middleman, and it becomes a transaction between the sender and the receiver. So there's no clearinghouse. The blockchain is the clearinghouse, right? So by taking away the middleman, you're taking away those large fees. So the fee, you can send $1 million to somebody in India, to a software developer in India for pennies on the dollar, which is huge, right? You're not sending wire fees. There's no FX fees. That's huge. So that's one. Speed, it occurs almost instantaneously. The blocks get mined, which is, by mined, it basically means process. Same thing as being processed, clearing, etc. Just think of mining. When anybody talks about mining, it's being processed. So the blocks get mined and processed onto the blockchain. Each blockchain is different, but Bitcoin transactions can clear in 30 minutes. Ethereum, it depends, etc. But pretty instantaneously. You're talking about 30 minutes, 20 minutes, 5 minutes, whatever, around there, depending upon how fast or slow the network is. Whereas obviously sending something internationally can take days and may not even clear. You're gonna have issues with the bank, etc. You have 3 different banks taking a piece of the pie. a lot going on. So speed, low cost, and then transparency. You can actually view your transaction being confirmed on the blockchain real time. So you have
Wow.
transparency into the payment being sent, being processed.
Right.
Whereas obviously with the bank, you have no idea. You're talking to some guy that's
Just
trying
waiting.
to that's trying to figure it out. So those three benefits are huge for businesses that deal internationally, either
Right.
with a remote team or paying vendors, paying customers, or receiving money from customers internationally.
Love it. Well said. Yeah. And being able to control the money themselves is very important. I mean, you don't have to rely on a company, like you said, a bank, government, fees, other controls, right? That we're currently in. So it's refreshing to see how you have the ability, one, to see it happening step by step, but also the security aspect of it, right? It's secure. This is far and beyond just the most secure out there. And can you talk about why is that and how is that?
Yeah, so to not try to get too technical, because I'm not a software developer, I just know it from the accountant finance angle. So
yep,
the blockchain is basically a network of distributed nodes. Node equals computer. So
perfect.
Think of basically thousands and thousands of computers. As blocks are mined, basically that code gets copied to all of those thousands of computers, and it's that exact same code. So thousands and thousands of different computers for each blockchain, or depending upon who's participating in the blockchain, basically have carbon copies of a blockchain. You can it's called spinning up a node, or you can run a blockchain, download the whole entire history of a blockchain on your computer and become a node itself to validate that transactions are occurring. So, but by doing that, it takes away kind of the honeypot of a centralized system, right? So
right.
if a company has an internally centralized system, it gets attacked. All you have to have is one attacker that comes in, they get access in, and all of a sudden they can change any transactions, completely screw everything up, and you're screwed, right? But with a decentralized network, when you have thousands and thousands of copies of transactions, right? A hacker can't go into one. If they change one, all these other computers know that one is wrong. Yeah. So the only way that, people say oh, can't blockchains be hacked? All these hacks that you hear about Bitcoin, that's just literally clickbait headlines. Bitcoin hacks is not a thing. The only way a blockchain can be quote unquote hacked, if you look at blockchain as a system, is somebody has to have control of 51% of all of the computers out there. If somebody controls 51%, then they can theoretically control the transactions that occur after that. But when you're talking about how big a lot of these public blockchains are, and there's a difference between public and private blockchains, but we're just talking public blockchains.
Right.
With so many validated decentralized computers, a 51% hack is super, let's just say it's super hard to achieve right now.
Yeah. No, that makes sense. That makes sense, especially if you get into, one building to break into the bank, it's simple. But if you had to break into that building and then there were 1,000 other buildings right after it, it's going to take a while to get through all that. And by then someone's going to catch on. So awesome. Now, well said. So then let's talk a little bit about the cryptocurrency. So there are a lot out there. You mentioned Bitcoin. Are there some in development stages? Can you just talk about that on some basic level?
So absolutely. So, on a basic level, a cryptocurrency is just the way to transfer value across these blockchains, right? So to start having transactions across blockchains. And that was the initial, if you read the Bitcoin white paper from 2009, oh God, almost forgot what year it was started, but the original Bitcoin white paper started by Satoshi Nakamoto. His idea was having a free open system that anybody can participate in to transfer value freely across the network, and it eliminates the double spend problem. So I can't have like one Bitcoin and send that same Bitcoin, like just say it's like serial number 1. I can't send
Right.
that to you, Chris. I can't send that same one to like 5 different people,
Right.
fraudulently, basically creating the same one and sending it to 5 people.
Right.
Blockchain eliminates that. And it again secures the transaction. So by having that peer-to-peer system, that was the original kind of creation on that. So the cryptocurrencies are again just the way to transfer value across those networks initially. So by now there are a ton of different cryptocurrencies out there, and this gets into like this whole DeFi movement that's starting now, where people have on the Ethereum blockchain basically figured out how they can create value and offer basically, if you want to call it like decentralized, I'll stake or give my 5 Bitcoin to this protocol, whether it's a centralized exchange or some decentralized smart contract. I'm starting to get into the weeds here. I'll probably lose people, but let's just say you take that 5 Bitcoin and you're basically lending it, like it's a bank, right? You're depositing it, and then either through a centralized unit or a decentralized protocol that's already code written into the contract, they lend it out. And they're able to give you interest rates on your Bitcoin that you basically give them. When I say give, that's I'm not going to get into whether you are actually giving it or you're still holding it in your wallet, et cetera. That's a different conversation. But you can get interest up to 8-10%, some different places. So it's huge, right? Like, I mean, today you hold your cash in your checking account at Chase or Bank of America, whatever, you're earning like nothing, right? Literally nothing.
Zero.
So these protocols, yeah, literally, you can earn interest on your Bitcoin. You can earn interest on your Ethereum. And as the value of those tokens go up, you're obviously earning more interest because the interest is based on the value, the price of the token at like a specific point in time. So that's just one instance. There's a lot going on in the space where can lock up different things. But let's just say that right now, the kind of banking, financial products that are coming out in the space are super, super interesting. And I think it's only going to get bigger, and it's attracting more and more people, obviously, because of the interest generated from these tokens, et cetera, and where this thing can go. So there's a lot going on in that space, but for simple purposes, sending and receiving crypto can be utilized for any firm, any business. And you can, you're gonna start having clients, as we have accounting firms that are listening here. You're gonna start having clients that are either gonna start transacting in crypto, holding crypto, et cetera. And you need to understand the ramifications of each. So, in a nutshell, for tax purposes, crypto in the United States is taxed as property. So think of like, you can just relate that to like, basically think of like paying or receiving like stock. You have to calculate cost basis and track or calculate a gain or loss each time you send or receive one of those transactions. So for accounting purposes, what accountants need to start to understand is, how do you track cost basis? How do you record gain loss? Is it short term, long term? Those tracking purposes for tax purposes. For GAAP purposes, it's recorded as an intangible asset. Whole set of rules that are different, but intangible asset.
You guys have a toolkit on your site too, right? A toolkit for
yes, exactly.
Right?
So we have a toolkit for accountants. That's one of the things that at Gilded we do, is we help businesses be able to track and account for digital assets. Digital assets meaning crypto, and sync those transactions into your existing accounting system. So we help like automate that process for businesses or for accountants that are doing bookkeeping for businesses or anything of that source. And we have a resource page and accountant toolkit to help kind of like, 101, like, what is crypto? How do we start tracking this? What do I need to know as an accountant, et cetera, et cetera, et cetera? Because I know a lot of people listening to this are like, oh, I've heard about blockchain and crypto for like 5 years. Like, when's it coming? When's it coming? Like, I don't care until, like, until my clients start coming to me with, and I get it. Like, again, I've been in there and I understand that until your clients start coming to you, like actually with crypto on their books, you don't care because it doesn't affect you. You're so focused on got to get this audit done, got to get this tax done, moving on,
Yeah.
moving on. But I'm trying to help accountants realize that this is coming. Like, it's coming. It's a matter of when, not if, and it's coming a lot
Yeah.
faster than people realize. The government actually, two things the government did, or two regulatory things that just popped up. One, the OCC just a few weeks ago said that banks can now actually custody crypto. So that's huge. Any
Wow.
FDIC covered bank can now start custodying crypto. So they're going to start custodying crypto, offering these crypto products, et cetera, et cetera, et cetera. You're going to see that coming rapidly. And two,
Wow.
a lot of people don't realize that in the first stimulus bill that government was going to, when the government for the CARES Act, when the government gave everybody their $1,200 checks, they were actually going to, in the first draft of that bill, they actually were going to send everybody $1,200 via digital currency. They were going to give everybody basically a wallet address and send everybody $1,200 via digital currency because that's the quickest, easiest way to get it. Yep. Now, obviously, that didn't get passed, but the fact that they put that in there really shows how far along or forward looking or close, how close the government is to really like making this mainstream, creating digital dollars, moving from this analog system to digital. So it's coming a lot quicker than people realize. And as accountants, this is a great opportunity for a new revenue stream for your accounting firm. If you already have a good knowledge or a good working knowledge of how crypto works, how to account for it for GAAP purposes, how to account for it for tax purposes, and you start having clients that are coming to you with these questions, you're already a step ahead of the game. You're going to bring in new clients that are going to have these issues, and you're going to be able to start solving these issues, start creating, again, almost like a new revenue stream. It could be a new advisory stream where you're advising clients on. Exactly. So it's a brand new opportunity.
That they're the specialists.
Exactly. It's right a brand new opportunity
they're
for a lot of
hesitant
these
and just
firms.
waiting for them to come. They're just waiting, and then it's like, all right, I'll get back to you once I study this.
Right.
But get ahead of the game. Be the expert. The tools are out there. The resources are out there, and you could be remote, right? Your team's remote.
Yeah, we're remote, and that's a big part of it, right? So we're a team that's fully remote. We have individuals or team members here in the United States. We have team members over in Europe. So we're fully remote, and you can do this.
Awesome.
Remote is the way to go, right? You can, obviously, with the coronavirus, that pushed everybody forward 5 years to this kind of fully remote environment that we're operating in, and there's huge benefits, right? Cost savings, et cetera, meetings, et cetera, that you can take with anybody across the world, and that applies with digital currency as well, right? Like everybody's moving digital, sending payments to people across the world. We're globally connected. We've been globally connected, but we're now globally connected now more than ever. So by having this globally connected transfer of value, being able to pay teams remotely, being able to pay vendors remotely, doing that seamlessly, easily, that's the future.
Yeah, and so you're remote, and you're obviously Europe, in India. You have some offshore staff as well. And how's that experience been? It's just been a seamless integration into your company, right?
Yeah, exactly. It's as a startup, it's super easy to utilize the communication methods we have today, the Slacks, the Messengers, Teams, whatever it is. Everybody coordinates through UTC time, et cetera. And by utilizing kind of global workforce, you're able to tap into a higher power of people. Right now, you're not just saying, hey, I need a software developer and they have to be in New Orleans or New York or wherever, right? Now you're actually getting a higher talent pool because you're global. It's like, I need a software developer from anywhere in the world. All of a sudden, your talent pool just got huge. So global remote work not only provides less costs on infrastructure, less costs on the back end, but obviously gives you access to a much greater and much better talent pool to where you can really move your business forward.
Yeah, there's a lot of clients that I work with that are in the smaller rural areas, or they just can't find local talent, or they can't find an experienced enough local talent. And you're absolutely right. this pandemic has opened up the eyes that it's just simply not a American workforce, the global workforce. And there's just so much talent out there. And as long as they're dependable, skilled, and able to you just work with you on, being personable, it's just like hiring anybody locally or in your office. There's no difference. And so
Yeah.
I'm glad you said that. So winding down now, I got a few more minutes. I learned a lot today, so I hope our audience learned a lot. So we appreciate that. And Guild is a great resource for this. Any other final thoughts or anything else you want to say?
No, if you guys have questions, please reach out to me. Twitter, Joey T. Ryan. LinkedIn at Joey T. Ryan. You can check us out at gilded.finance is our website. Twitter, gilded at gilded finance. If you have any questions, don't hesitate to reach out to me. I'm happy to help all accountants kind of start educating you guys on what's coming, where we're at, where we're going, and really help you guys kind of build that knowledge base to push a new kind of revenue stream forward and stay on top of kind of the new happenings. So
exactly, spot on. Well, awesome. Yeah, this was episode 11 of our hashtag BKOT, how to build a kick-ass offshore team. I hope everyone really enjoyed Joey's presence today and speaking about this. And yeah, I mean, obviously he knows what he's talking about. So if you need to get more details, please reach out to him. And just the idea too of building a kick-ass offshore team, remote aspect, offshore aspect of it, having access to this talent. Integrity has the resources in place for the staff to help you out. So learn from Joey and then get the staff through Integrity. And then your firm, the sky's the limit, right? So again, right. Joey, thank you for joining so much.
Absolutely.
Look forward to speaking with you in the future. And that's it, folks. So we're going to sign off. Enjoy the weekend, enjoy the holiday, and be safe and peace out. Take care.